Good day, Market Chameleons, and everyone joining for the first time. Thanks for coming by and checking out the Market Chameleon live webinar series. Before we get started, let's take a look at the shared disclaimer. Please be aware that neither Market Chameleon, Dimitri, or myself are registered investment advisors or a broker dealer. If you're searching for investment advice, please reach out to a licensed professional. This webinar, as all our webinars and shows, are for informational purposes only concerning Market Chameleon tools and products. With that, one last look at the disclaimer, and let's welcome Dimitri Pargamonic to the stage. How you doing, Dima?
Good morning, Will. How are you?
Great. Let's get your screen up. There we go, the beautiful Market Chameleon landing page.
Good morning, everyone. And today, I think we'll follow up on our discussions with screening for spreads, vertical spreads, put spreads, call spreads. We'll take a put spread today. And first, let me navigate to the screen so we can discuss it. And up top, under screeners, go to the right-hand side, and let's do the bull put spreads, credit put spreads. So I'm going to click on that, and this will take us to our credit put spread screener. And up top, we have all our filters. So you can see here, we can tab through different filters. Down below, we have the data and analytics for different combinations of put spreads. So here you can see these are all kind of organized by highest market cap stocks. So you see a lot in NVIDIA right now. And if you go from left to right, these are the spreads that we are analyzing. So the strikes, the 185, 190 strike, sell strike 190, buy strike 185. This is the expiration listed, and that defines the particular spread that we are analyzing. Okay, we could change those expirations up here or the strikes in here, but let's leave it for our default for now, so we could kind of do a particular type of screen. So what we'll do today is we're going to try to narrow down the spreads that we're analyzing based on volume and trading indication or leans in the market. Okay, so the idea first is we want to look for put spreads where the option legs have trading volume. And the reason behind is that, well, there's trading interest in there. We could analyze for better price discovery, theoretical values, and potentially get better executions based on the trading interest that we are observing and how to place our trade. And when there's trading volume, then there potentially could be opportunities based on, how the supply and demand are pushing the values of these options. So first, we're going to come over here just to show you where do we see in the screener in our data where the volume is for each of these options, right? So we're going to go over here, volume analysis, click on this tab. And when we're on this tab, we have, here we repeat which spread we're looking at. And here is the volume for each leg. So for the trading data, the buy strike, buy put, the volume in NVIDIA here is 25,456. So when we're looking at the 185 October 17th put, the volume is 25,000. On the sell side, the sell strike is 190 October 17th. The volume is 5,709. And we also list the open interest, right? So there's liquidity in this option. There's trading interest in these options, which, could create opportunities based on, executions or how those values are getting pushed. And that's, we don't always have that type of volume. NVIDIA happens to have a lot of volume, but not all, options and even certain securities have that type of volume. So if we wanted to filter out where we see volume in the leg, so this is not necessarily volume in the spread itself, which we could screen for, but just general volume in each of the legs, right? So then to do that, we'll come up here and you see we could filter by open interest or put volume. So let's just say for each side, we're going to require at least 1,000 contracts. Okay, so right now we have over 15,976 potential spreads to analyze. But let's just say we want to narrow down that there are at least 1,000 contracts traded in each of those legs. So I'm going to say for the buy put volume over 1,000. So now this screener just narrowed it down to 3,151. And for the put volume also over 1,000 contracts. So we know that there's some trading activity going on, at least 1,000. So you could see here all of a sudden we went from 1,500 different potential combinations in October 17th to 1,561. Okay, so now all these, so like we could even sort, like if I sort by, sell or put, you could see here FXI has 2,000 contracts in the October 1737 put and 1,000 contracts in October 1739.5 put. All right, so now these are the trading. Now we're looking at as of yesterday's close. We're not open yet, so this is looking at yesterday's data. So now that we got this, another thing we could narrow down is the most recent displayed interest based on a market lean. Okay, so when we look at what is a market lean? Well, we have a bid and an offer, right? So each option has a bid and an offer that's displaying the interest to buy or sell the option. Well, we talked about market leans where that bid and an offer could get squeezed. It could come in based on trading interest. So if somebody's competing to buy an option, but not necessarily go pay the offer, but improve the bid, they're going to start leaning into that spread, right? So they're going to start to tighten it up. So it could tighten up on both sides. It could tighten up where the offer keeps getting closer to the bid, or the bid is getting closer to the offer, right? So we have ways to detect that based on the implied volatilities. So when we look at selling something, right? Let's say we're looking at the sell strike, right? If we're doing a credit put spread, we're selling one, we're buying the other. So let's start with the first one. If we're looking to sell an option, well, we're trying to sell it at the highest possible price, right? So as a trader, you're always trying to sell it at the highest price you could possibly get. And as a buyer, trying to buy it at the lowest price you could get. So if we're trying to sell something, we want to see where there's buy interest, somebody trying to, bidding up, because that will give us a better price. So there's an interest to buy an option, which potentially could get us a higher, better execution. So we're going to look for on the buy strike. Oh, I'm sorry, on the sell strike. We're starting on the sell strike. We want hold on a second here. Sell strike lean. We want a bid lean, right? We want to see where the market is leaning in using the bid side, right? Competitive bid. Let's do that. And now we're going to filter out. Now we have 72 of these. So you could see that there's on the sell strike, there's a bid lean. Okay. What about on the other side? We could even squeeze in more. Let's say now, we're like, well, that's pretty good. Now I got like 72 potential things to look at. But let's say we want to do a ask lean on the buy strike, right? So on the opposite strike, when we're buying something, we want to see, well, there are offers, though there's market participants trying to sell it, and maybe that could give me a good price because I'm trying to buy it at the lowest price. So let's look at a ask lean on the buy side. Let's see if we get anything there. So now, we filtered down to 11. So what we did here was, so this is only looking at October 17th, but we have, 11 entries here where it's kind of showing up, hey, there's volume going on. We're looking at a put spread. There's volume going on here. I think this is what, Robinhood, right? So this is Robinhood. Okay. So we have both options, the October 17th, the 135, 134 option, are actively trading, 1,950 in one option, 7,948 in the other. And not only are they actively trading, but we're detecting where there are leans in there, giving us potential trading opportunity to improve our price. Okay, so we could go and take a look at this. I'm going to press this, but I'm going to go to Robinhood and show you guys, but we're going to look at the October 17th, 134, 135 put spread. Okay, October 17th, Robinhood, the 135, 134 put spread to see what that looks like in options chain. Okay, so I'm going to type in Hood up here. Hood. This takes us to the main page. I'm going to go to the options chain. Now, if you click that button, it would have opened it up for you, but I'm just going to go the long way. So I'm on the options chain, October 17th. All right, let's close this menu to expand our screen. So by default, we're on October 17th expiration. And these are the 135, 134 strikes. So you could see here, the 135 strike, it's a 370 bid, right? So this, right, looks like it tightened out. Like you could see here that the market itself is 10 cents wide. Look at the market above it. We got like 15 cents wide. This is, you could see a lot of them are even wider than that. So it tightened up, and it looks like it's on the bid side. You see the implied vol here? It's higher, 61.9, higher than this one, higher than this one. So it's indicating that there's a buy interest, right? Somebody leaning into the market. Here, you know what? Let's do. I'm going to do the IV lean spread. This will make it a little bit easier. The 135, so you can see it's 10 cents wide here. The one above is 25 cents, 15 cents. So this one's looking like it's leaning in, 370. Bid, 61.9 vol. This here, the 134 put, appears that it's also leaning in. So we've got a 63 implied vol, but look at the options around it. This is offered at 63.8. This is 63.5. So the options directly around it on a relative basis, right, are more expensive in the implied volatility. You'd have to pay a higher implied volatility for this option, and a higher implied volatility, which are the surrounding options. So this one looks on an implied volatility basis as the cheaper of those that are. So it's like appears like there's a lean coming into there. And you could see here, this traded 13,351 contracts, 1,952. So if you're looking at, I'm going to click on this on the bid, right? That's on that would be creating an offer on the sell side, right? That's one leg. Then the next leg, you're clicking on the offer. So that's the other leg, right? That's the spread. Selling the October 135 put, buying the October 17th, buying the October 17th 134 put, right? That's the credit spread. And if you bring it up, run the analysis, there's your credit spread. So what we did was start from the screener, narrow down potential candidates based on trading volume. So we see these are pretty active options. And we detected certain leans that show potential better price execution, or where there's indication where someone is looking to, perhaps bid up one option, sell the other, and of course, maybe even get something in between. Because hold on, let me just show you some. What was I doing? 135. I'm going to set this up again. So you could see here, that's if you sell it right on the bid, 370, and buy this on the offer at 330, that's 40 cents. But you could see here that the market itself is 40 cents, 65 cents, the midpoint 53. So you potentially here could even get a much better, execution than the bid itself, because it's still wide and it looks like the market itself is leaning towards competition, where maybe you get 53 cents, 55 cents, maybe even putting in an offer at 60 cents. Remember, you want to sell it for the highest price possible when you're selling, buying at the lowest price. It gives you a opportunity, to improve your price execution in actively traded option. So, Will, I'm going to stop right there and throw it back to you.
Hey, D, great webinar. Thanks for bringing these live webinars to the Chameleon community. It's very much appreciated. We have a couple new users on today. Thanks for checking it out. Great job, D.
All right. Thanks, everyone. Stay safe out there. Have a great trading day, and we hope to see you tomorrow.
We'll see you tomorrow, my friend. Bye-bye. Hey, everyone. Thanks for joining the Market Chameleon webinar series. If you're on YouTube, thumbs up, greatly appreciated. If you're new to Market Chameleon, make sure you check out the Market Chameleon website, and you can get a free 7-day trial. Just click that trial link. Everyone else, thanks for joining. Have a great day, and we will see you tomorrow. Trade in peace, everyone. Bye-bye.